Hello, ladies and gentlemen. This is the Newsbeat Master video. The point of this video is to not explain every single thing that I'm doing ad nauseum in detail, but to give you an overview of the current strategies and other things. There's going to be a lot of cool bonus things in this video, which you guys are not going to expect, which I am going to share with you. We're going to talk about every aspect of trading aspects that people don't speak about, psychological aspects, the things that I've learned after 2 decades of being an active intraday trader, and things like that, valuable things like that, in which people really just don't talk about nowadays, unfortunately. So we're going to go ahead and we're going to make sure that we go over that. And we're going to share some strategies with you, including all the updated strategies. I didn't update the portal, but by the time you watch this video on replay, your portal should be updated with all the slides you're about to see. Also, if you are a Twitter member, which in the description of this video, we show you how to become a Newsbeat Live Twitter member. It's offered for you for free. There's no more $2,000 cost to be part of my Twitter service for a year. You get it absolutely free with your subscription, and we just try to keep adding more and more value to your basic subscription package to do everything we can to make you a profitable trader. I want to say that the creation of this video came with a lot of work, especially during these interesting times, to say the least. And I hope you guys are going to derive value. If you're seeing this video, it's probably the video that I'm going to send a lot of you to intentionally to help you. Make sure you read the description of this video as well, as it will be able to further help you find certain things. So, ladies and gentlemen, without further ado, we're going to start with the non-strategical parts of trading, and then we're going to go into a lot more of the strategical parts of trading. So, I just want to talk about how to really set yourself up outside of trading in terms of what do you do when the market is closed type thing. And we'll be discussing a few things here. We're going to just start off with very simple. We're going to fly through this. It's not going to be a terribly long video, hopefully. If I could score this in under an hour, I deserve a medal. So we're going to start off with the hardware, computer, mouse, monitors, etc. And people talk about this a lot, about this topic. It's definitely a very interesting topic. Look, your budget does come into play. Your budget does come into play. So what I suggest is if you're really getting a computer, optimally you want at least 3 monitors, and I'll explain why over here. You want 3 monitors, preferably 2 video cards are best, especially to handle any graphical things from your charts to this to that to streaming. If you're streaming our broadcast, etc. 2 video cards, I think, is key. And remember, I have to assume that budget, I don't know people's budget. You could get a 2 video card computer probably if you're pretty much buying like $1,000 to $1,500 gaming machine. You're pretty much going to be in good shape. Or you could start building up computers like I have done, where you spend like $16,000, $17,000. But again, my computer needs are going to be a lot more demanding than yours because I'm actually running a live broadcast, streaming my screen, and doing a lot more things. So just for a basic trader, I'd like you to have 2 video cards. I think it's very important, and I'll just increase the font here. And the next thing I want to do is talk about the 3 monitors. Now, the size of the monitors, I don't care. What are you comfortable looking at? I mean, anything you can fit on a 14-inch monitor that you could fit on a 50-inch monitor. It's just the letters are going to be bigger or smaller, right? I mean, I'll leave that up to you. I'm not, I think I have like 24 to 26-inch monitors, I believe, and there are 4 of them that I have up in front of me. But again, why 3 monitors? So you need 3 monitors, one for your trading, not trading, for your for your software layout. So if you're using like a Charles Schwab or something or whatever software you're using, the layout of the software should take up one of those monitors. Another monitor should be dedicated to charting. And the third one I like to call miscellaneous, which could be the Newsbeat Live Room, websites, etc., whatever you want. So that's pretty much, you should have one screen dedicated for charting. You should have one dedicated for your software layout. And you should have a miscellaneous one so you could leave the Newsbeat Live Room, websites, anything else that you have on your computer. You know, you're looking up whatever, your email should be on that other screen so it doesn't overlap. So you have two full screens dedicated to charting and software layout. Now I have four monitors, and you might ask, well, how do you do yours? Well, mine is the same exact thing as you see here, except I have a fourth monitor that has also a charting layout. I have a fourth monitor that also has a charting layout, but just keep in mind, I have to broadcast that to you guys. Otherwise, I really don't need it. So again, I think three monitors is key. I don't have anything in terms of like, you might be sitting there and saying like, what kind of video cards? If your video card is like any NVIDIA or Radeon video card, even if it's like near the bottom of the line, like near the bottom of the line, you should be fine. Like, again, I have more top of the line stuff for what I do because, again, my computer needs are a lot more demanding than most people simply because I am a broadcaster. But you really don't need to spend that much. I mean, I'm not counting the money uh, in your coin purse over there, but as long as you're able to have, I would guess around 1,000 to 2,000, maybe even $1,500 computer with two video cards and monitors, you're fine. It doesn't matter which monitors you get as long as you're comfortable looking at them. And that's about it. And you might say, well, how do you want your monitors arranged? Left to right? You want one on top of each other, two and one? Whatever you're comfortable at looking at is what you should use at the end of the day. It really does not get more complex than this. All right, so it's um, pretty simple on the computer side. The next part is mouse. So on the mouse side, get a gaming mouse. Get a gaming mouse. We could do it together. We could do it together. I mean, currently I am using a Logitech G502, as you could see, or if you can't see, if it's zoomed in, there we go. A little dirty, yeah. Probably should clean it. Anyway, um, G50, I use the G502. Any Logitech mouse will be good. Any Razer mouse will be good. You want a gaming mouse. You need a gaming mouse. Do not get a gaming mouse. That is a tremendous mistake. Also, one of the biggest mistakes people do, don't get a wireless mouse. I know it costs more. It's stupid. Do you really want your battery to flicker in and out? Do you really want your cat to fart on top of your table and the gas from your cat suddenly disrupts the connection from your mouse to your computer and it freezes as you're trying to move in the middle of a trade? Don't be stupid. Don't be stupid. Don't tell me that it looks neater on your table without the wires. I believe you. This isn't a beauty contest, ladies and gentlemen. All right, this isn't a beauty contest. Get a wired gaming mouse. You can get them very cheap. The mouse I use, I think, I'm not sure what you could pay for it now, but just to give you an idea, or if you just literally go to Amazon, you could look it up on Google. I could give a crap less where you buy it. Look at this. They have these wired gaming mouse for 17 bucks, 23 bucks. Here's a PicTac 23. I mean, if you want to go down that, if you're trying to save some money, I mean, this will probably be far better than any wireless mouse you're using, even if you're using any wireless mouse. You could use a Razer mouse. Again, you pay a little more money for those. If you want to know what I am currently using, I'm using the G502. And the mouse I use right now, you could, I think somebody found it for $40 before. I mean, I see it right here. I would look elsewhere as well. Some here, some of them are like you could see the G402 at 40 bucks. Again, it doesn't matter. Just get a wired gaming mouse for God's sake. Don't be stupid and make that mistake. As I said before on the monitors, it really doesn't matter what you use. I also want to mention keyboard. Get a gaming keyboard because gaming keyboards are meant to send the signal to the computer faster than your normal wireless keyboard. Do not be stupid and get a wireless keyboard. That is a big mistake. I know it looks nicer. I know there are no wires. I know it's easier to set up. I know it feels cool that you can pick up your keyboard and smash it against the wall and still type on it. I get it. I get all that. Do not be that person. Um, get a wired, everything should be wired, including your internet connection. Including your internet connection. I mean, you should always get a wired connection. Do you really want to be that stupid? And I'm not putting you down because a lot of you have it. But if you have a choice, it's stupid if you have a choice to not use wireless. So like speed test, like you should really, it doesn't really matter, what service you get. But here's just speedtest.net. You could literally go here. That's just to share with you the website over here. That's just speedtest.net. You could see how fast you're uploading and downloading. Definitely check that out and make sure that you have a very fast download and upload speed. So, I pay for a gig service. Again, do you need to pay the maximum money for a gig service? No, but you should have a stable connection. A stable connection is a lot more important than speed. A stable connection is a lot more important than speed. I would rather have a tenth the speed I just showed you and know that I never go down. Now, how do you know if you never go down? A lot of internet service providers suck. A lot of them will not be available to you. Verizon Fios is the best internet service out there, period, for common folk like you and I. By far. I don't care if you think Verizon's the devil. I don't care if you think they're overpriced. They are the best, period. It doesn't even compare. You're talking to somebody who had Comcast backup, DSL. If you're using DSL like satellite, you'll have a cloudy day and your internet would drop. There was a trader here who was losing money every time because he couldn't trade the open. He had to shut off every single thing in his house because he had DSL. Look, if you're living up in the mountains and you live in a cave and you have a little satellite on top of one of the rocks in the cave, which you put a little umbrella over so the rain doesn't, destroy the electric ports. Look, you're gonna have a harder time trading. You're gonna have a harder time trading than somebody else per se. It is very, very, very important that you keep your internet stable and wired. If you have that wireless connection, you are risking fire. Look, everything I tell you, nothing's 100%. It depends on your budget and your life situation. I'm going to tell you the best thing to do. At the end of the day, some of the things I'm telling you might be impossible. You might, Mark, I can't afford a new computer. Mark, I can't afford a $40 mouse. Mark, I don't have good internet in my area. I only have this. And people ask me, what should I do? And then it's like, well, the best thing you could do is move out of wherever you're living and go somewhere else. Or you could try to do the best with what you have. I mean, there's really obvious answers to all these things. So when it comes to your internet connection and everything, make sure that you have a wired connection inside, a wired connection inside, connect into your computer. The Ethernet's connected. Very, very important. I had to spend thousands of dollars because where I am right now is the exact I'm at the farthest end of my house from where the Fios was actually installed. So I had to run Ethernet through everything, but you obviously saw my speed, and it works out really well. Okay. Next thing, ladies and gentlemen, is I'm going to talk about the software trading platform and the charting platform. Now, you guys know I use Street Smart Edge. If you're a Newsbeat Live member, you could go ahead and get Street Smart Edge, and I will share my layout with you. I'm not really going to say that you should or shouldn't do that. There are many advantages and disadvantages to every software out there. Right now, if you're wondering how these brokerages charge you zero, is they actually sell your order flow. They sell your order flow. There are they sell your order flow, Schwab included, to places like Citadel and places like that. They are literally, ladies and gentlemen, selling your orders to be front run by black boxes and algorithms. I know it is quite disgusting, but um, don't think that the brokers that charge you don't think like every single prop firm isn't somehow utilizing your order flow, because just about every one of them are. So it's actually a common practice done in the industry. You're probably not going to find a place that, even if they say they don't sell your order flow, it probably means they're running their own black boxes and they're utilizing your order flow to take advantage of you, and they're making money off you. For example, if they know that you want to buy 1,000 shares of stock at, $50, and the bid's at 49.90 and you're trying to buy $50, they'll buy the 1,000 shares milliseconds before you at like 49.93, and they'll just literally sell to you for $50 and just made $70 off you in like a second. Not even. I said a second. No, that's a very long time. That's what selling order flow is. With that being said, I just thought it would be prudent for me to go over it. But I'm going to share with you just what my software looks like right now. And it's pretty cool in a way. I'm just going to go ahead and I'm going to zoom in on it so your screen will turn black for a second. And I just want to show you like how quickly I can get something done. I'm going to go ahead and just stretch it out, so it's going to look a little bit awkward, but for the sakes of you looking at it, it'll be helpful. And pretty much like if I needed to buy anything right over here, again, you could set it for whatever you'd like, but let's say, for example, if I needed to buy 1,000 shares of Microsoft, like how fast could you buy 1,000 shares of Microsoft? Me, it would just be MSFT, and whether I wanted to buy the stock, it would be right over here. If I wanted to buy the first option out of the money, it would be right here. If I wanted to buy the first put out of the money, it would be right here. And I'd be able to execute on calls, puts, or stock in not even a second. Like if I had to go ahead and I wanted to buy, for example, Amazon, AMZN, click, I just bought 1,000 shares market order. No, Mark, I wanted to do options. I just bought 10 contracts market order. No, Mark, I want to buy puts. I just bought it. So I have stock, calls, puts. It's a very effective way. It is a very, very effective way of trading with speed. It is conducive for speed. It has my ex pro gamer two thumbs up professional approval. It is a very fast platform. If you are not using a platform that let you buy options or stock as fast as I just showed you, you're at a disadvantage. If you can do it as fast as I showed you, or faster even, you're fine. You're fine. And yes, you could even set up hotkeys with Schwab if you want to just press a button afterwards, as opposed to just clicking the buy or sell button. That's fine too. That's actually even faster, of course. But that is what it is. Okay. So very important that you guys get a fast software layout. I've been told, at least I'm the only person in the industry who talks about software layout. So I am going to be talking about topics that not many people talk to you about. I mean, when people want you to swipe your credit card to sign up for a service, there's no need to really talk about a trading platform. But I use this platform. Is that okay? Oh, sure, sure. Come over here. Come over here. That's like saying, I'm sitting there going to battle in the stock market with like a huge like missile launcher on my shoulder, and you're going into like battle with like a steak knife. Let's see who's more effective. Now, I'm not saying again that I use the best platform. I use a platform which I feel has the best option pricing improvement It has a $0 commission, which is life changing for somebody who spent millions of dollars in commissions. It's life changing, really. Life changing to pay $0 per share. Charting platform. As you guys know, I do use TC2000. TC2000. Everything that I show you in terms of strategy will be based on TC2000. They have the best trend line drawing software out there. I happen to be a very big part of it, of the design. Things click in easy, and it's just very simple to use. You can have a simple four chart layout, as I have, that you guys will usually see me in the broadcast with, or you could track like 9 stocks that you like. You could track 9 stocks that you're watching, and try to trade off them as needed, of course. So very effective software. When it comes to certain things, I'll be talking about like exponential moving averages and VWAPs and pivot points. They're all based on the TC2000 software. I cannot tell you if your charting software is or is not doing the same thing. I know people say whatever you're used to is best at the end of the day. I disagree. I'm not saying there's nothing comparable to TC2000. I know people use TradingView, people like the Thinkorswim, the TOS charts, or other charts. I feel you're at a disadvantage, personally. I feel you're at a disadvantage. The whole point of a charting software is to not have your charts on your own trading software. Most trading softwares have charts, obviously, and you'd have to pay for a subscription if you get TC2000. If you wanted real-time data, I highly suggest you do it. I think it is a tremendous advantage. I hear it's a tremendous advantage to use it, and everything I refer to, I cannot really tell you um, what your what your charting platform is or is not doing for you. But I will tell you one thing: when I go into the moving averages and whatnot, um, when I'm using moving averages in VWAP, I'm never taking into account pre and post market data. So it's very important that you leave that off if you are doing that, okay? Next thing on the list is, where do I learn options? How do you use options? Real money in line, strangles, straddles. Here's the thing that I tell people all the time. I treat options as if they were a common stock. I kid you not. Despite making millions or whatever I've made in options, I really don't understand them so well. The best place to go is cboe.com/education. cboe.com/education. Don't pay for somebody's stupid ripoff course. I don't care who the F is angry at me because I'm not pitching their little cruddy, crappy option trading course where they want to teach people how to trade. I'm actually here to save you money despite showing you the best options for you that do cost money. Go to cboe.com/education. They will literally take you getting started, online courses. It is free. I have not personally taken it. I personally just trade options as if they were common stock. I don't even know the Greeks. I don't even look at the Greeks. I don't know the implied moves, the delta, beta, weta, shmeta. I don't know it, and that's not a good thing that I don't know it. Ignorance just happens to be bliss for me, and I like to keep things simple. If you want to learn more about things, if you want to have further education of options than I have, despite trading, I've been trading options like 7 years. So, I've been trading stocks 21 years. But I've been trading options 7 years. If you want to have more information than me, go right ahead and, you know, um, be my guest. I mean, again, at the end of the day, um, at the end of the day, I'm going to try to show you the best ways to do things while saving money. Certain things you can't really save money on, like Verizon Fios. You could get the cheapest Verizon Fios connection. You don't need like the super fast one. You need reliable and fast. Reliable is more important than fast when it comes to internet. But when it comes to education, most of it is bull. Most of it is outdated. But if you want to learn like what is an option and what is this, I mean, obviously that never changes, even based on market conditions. cboe.com/education. Where should your eyes be when you enter trades? Where should they be? They should be on your level 2 box. So for example, um, when I'm actually trading and I'm actually looking when I'm actually looking to throw a trade on the table, I'm actually looking at the level 2 with my finger on the button to buy. So for example, if many people are looking at their charts when they're trying to do a breakout trade, huge mistake. Huge mistake. You should be looking at your level 2 box at all times, ladies and gentlemen. I will show you exactly how to do that right now. Just one moment. I'm going to go ahead and just screen. I know your screen is black. Just chill out. And I know the market is also closed right now. So that makes it kind of hard. But so for example, if I wanted to buy Apple, right? And I wanted to buy, for example, I wanted to either buy Apple shares, but let's say I wanted to buy Apple $340 calls with a market order. So my finger would be ready on buy to open. Like notice when I left click, you see the mouse turn black, the pointer of the mouse turn black here. My finger would be ready to buy on open, but my eyes would be right over here. So let's say the trigger was $338.50. I would see how the stock here is going to 338.50. And as soon as I'm comfortable, I wouldn't actually click buy to open. You want to know what's actually funny? I actually have my finger depressed on buy to open. I actually have it depressed. And you know what happens when I need to buy it? I simply let go of the left click. I'll literally just let go of my finger and it'll literally buy to open. So let's say I was watching my eyes right over here on the left-hand side. I'm looking at the bid, I'm looking at the offer. I'm more looking at the offer. I'm looking at both simultaneously, but I want to see this offer. Let's say the trigger that I'm looking to buy through is 338.50. I'm using that as just a stupid example because I see a 338.40 offer. Let's just say it's 338.50. I'm looking over here. I want to see 338.45, 338.48. Maybe it's going fast. Maybe as soon as I see 338.48, I go ahead and I buy it. But I'm predicting it going through the 338.50. Sometimes I'll be a little later, sometimes earlier, sometimes on time. I believe there's a front run strategy that might be in the link of the description as well. I'll have to double check that. But if I were to buy it again here, my mouse is on the buy to open button. The left click is depressed. If I need to let go of my button without buying it, I pull it away. See that? Let's say 338.40, then 338.30, 338.20. No, I don't want to buy it anymore. I'll pull my finger away. Oh, it's going back up to 338.50. I'm getting ready. That way, my speed is unparalleled because I'm literally, when it's approaching the level, my finger is depressed. And then as soon as I want to buy the stock, I just go like that. See that? Just whoop. That's it. Again, if you have arthritis, God forbid, or some of these other unfortunate things, and it's hard for you to do that and whatever, obviously do not do that. There are some physical limitations to doing that for some people. If you can do that, I think it's a very big thing. So when going back to the question, where should your eyes be when you enter trades? Your eyes should be, ladies and gentlemen, on your level 2. Should be on your level 2. Okay. And again, we are going to get to everything here. I'm just trying to answer a lot of the questions. I'm not going to get everybody's question will not be answered through this video. This video is not here to answer every one of your questions. This video is here to be a go-to to learn how to trade, our strategies, and how we run things. Market divergence thoughts. Um, Certain stocks are strong when the market goes down. Certain stocks are weak when the market goes up. I'm more likely to want to go long or short those names because they seem to be more resistant to the market. As a generalization, I always want the market to be going in the direction of my bias. So if I'm long Apple, I want the Qs and spiders going up. If I'm short Apple, for example, I want it to go vice versa. Okay. Let's delete that. Is that good? All right. How do I choose stocks in the pre-market and after the market opens? Again, another relative strength question. Well, pre-market, I'm looking for analyst upgrades and downgrades. I'm looking for volume. I'm looking for strength. I'm looking for sector. I'm looking for news events. I'm basically looking at every single thing that we have public information for. Like anything that's publicly out there, I'm looking for. After the market opens, I'm looking for forms of relative strength or weakness, both. If I see the market going down and I see a certain stock holding up well, or even if the market's going up and down and I see a stock really holding up well, that's the one I'm going to want to usually buy. So even though I choose sometimes stocks in the pre-market, I'm not always trading those stocks in the pre-market. Okay, keep that in mind. Okay, so next thing we're going to talk about is one of the most common things here is position sizing. When to reduce, add, tier up. There are two answers for that. So position sizing, obviously it's based on your account. Obviously it's based on where you are in life. Obviously it's based on your financial situation. Obviously it's based on your goals. Obviously it's based on what you're willing to risk. So any of those morons out there who like to just say, "Oh, you have like a risk unit," is the stupidest crap I've ever heard because it basically leaves room for no conviction. It means if somebody ever uses the word risk unit or a unit of risk or things like that, it's very popular with many of the Wall Street gurus. I mean, besides for the fact that you should run away as quickly as you can, it translates into I have no conviction behind any of my trades. So I am pretty much looking to risk the same thing every single time. Now, it sounds nice from some perspectives that you should lose as much as you're winning, or you're not gonna take a big beating on a huge trade and a little win on another trade. Like, I get that, I understand that, but here's the bottom line: certain trades are better than others, and if you don't feel that way, we have a lot more to talk about. But now let's talk about, let's say you figured out your conviction, you figured out your position size. When do you reduce it, tier up? I like to lock in my win. So if I score a nice win early, I'll actually just start reducing. If I take a loss early, sometimes I won't reduce. I'll just keep the same tier. The whole goal for me is to remain green. I like how much I'm green, I really don't care about. Like my first $1 million, my second $1 million, like I never really cared about the money. It was just about being green and being profitable, and that kept me sleeping well at night. I wasn't I wasn't in a fetal position. I was looking forward to trading the next week always, and it's a healthier way to live. You know, they say stress causes disease. If you believe that, then you really have no choice to do my style of trading, if that's what you're concerned about. Okay. Um, okay. So next thing on the list we're going to talk about here is, of course, the ever so scary dun 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 tilting. So, there's a link to the description of tilting in the video. If you want to learn more about tilting, watch it. Okay, very simple. I'm not going to do everything deep in this video. You could use this video and its links if you want to know how to prevent tilting. If you don't know what tilting is basically, and everyone can relate with it. I've tilted 100, 150, 200 times, maybe 200. I don't even know times in my career. I mean, I've been trading 21 years. How many times have I tilted? Many to get to the point of where I am today. Many, many stupid things. And what a tilt is, it's actually you could probably look it up in Urban Dictionary. An Urban Dictionary is let's see, tilting. Let's see. So tilting, I've heard it more in the video game perspective, but tilting is when you're so pissed off from losing multiple amount of games, you play worse and worse until you're so pissed, you begin leaning over your keyboard and screaming every little mistake you make and complaining about the game imbalances. Common in StarCraft 2. Yes, common in a lot more than StarCraft 2. But tilting when you trade is you basically take a loss, the market is following you. The market knows what you're doing. Everybody should buy now because you sold. Everybody should sell now because you bought. The market just has you completely figured out. You're pissed. You're tearing up. You're tripling in. You're buying losing positions. You're doubling down your biggest positions. Always start with a loser because that's the only thing you'll ever add to, which you could just get used to not adding at all, which is healthier. If you want to learn more about that, there's a link in the description that goes in depth. I highly suggest you watch it. OODA loop. OODA loop sounds kind of funny. No, I did not make up that acronym. It actually stands for, what's stupid? It actually stands for Observe, Orient, Decide, and Act, which was developed by military strategist and U.S. Air Force Colonel John Boyd. And it literally shows he basically helped us win the Korean War, despite being like outpiloted, I think 3 or 4 or 5 to 1 in terms of planes, enemy planes to United States planes. And he literally taught his pilots how to react when you're actually in a dogfight, which is, if you're not familiar with the term, our military people here will know dogfight is planes, airplanes firing at each other is a dogfight, by the way. So during these dogfights, life or death situations, obviously, this is how you were supposed to think. You're supposed to go through a psychological loop of how to defeat the enemy. I have developed the first system ever that combines an OODA loop into trading. It's a very inexpensive course. Again, I'm not counting your money. There's a link in the description to sign up for the course. Do not sign up for it through the link in the description, even though it's only like 200-300 bucks. Instead, contact a trading counselor and see if they can get you a deal. I would go through them first. It's the Newsbeat Bandit course. The strategies in the course, ignore them because strategies changed, as I'll be sharing with you in this video. But the OODA loop section of the course makes it completely worth it. Next, of course, is TC2000. TC2000 is next, and that, of course, is the charting platform, which I was telling you guys to go for. The thing with TC2000 is I can share my layout with you. If you like my layout, I can share it with you. Like once you get into the software and the pricing, I mean, you could just do like an annual silver plan. That's all you need. It's 832 a month. That is not expensive whatsoever. It's 832 times 12. It'll cost you $100 a year, $99.84. You'll pay $100 a year. You'll have real-time stuff. You won't get all the stuff with gold or platinum. I believe I'm in a gold. I believe I'm a gold member. I'm a gold member. I don't use it to trade. I think that's a mistake. They have all these optional data feeds. I'm not sure which one. I think I just do the optional data feed. I think I just do real-time US stock data is the one I subscribe to. So I'm paying about 40, 50 bucks a month, something like that. And again, very effective charting software. I couldn't more highly recommend it. Okay. Now we are going to go into the fun part of things, and we're going to go into the strategies. And again, I'm not going to show you a million examples or even examples on every one, but I'm going to show you the slides and I'm going to go through it again. The point of this video is to be a rather quick video. I know we've been going on for 40 minutes already. My goal was to finish this video in under an hour, so it could be an easy go-to video That explains our strategies, and let's just get to it right away. We're going to talk, ladies and gentlemen, about the very famous, infamous, the very so famous and infamous, ladies and gentlemen, I present to thee the one and done. Very powerful strategy. Now, these slides that you see will be available for you in your portal. I'll probably just end up, maybe even putting them in a little list or somebody in the room will, and you could do it, but you could literally just print them right out of your portal if you'd like. You could just screenshot them and print them right out. These are all the updated ones. Oops, I actually have to just add the version to the one and done. The one and done was just recently added. Just making sure. Anyone want to guess what BM stands for in version? Anyone want to guess? um, um, Stands for bear market. So just silly play on the version name. And let's go ahead and go over them. Why don't we? Okay, so we're gonna start off with you choose, and remember, please take every single word you see here literally. It means what it says. It says what it means. Okay. Choose any Newsbeat name that gaps up. This is only valid for the first time it happens. Now in the setup, you have to wait for the first 1 minute bar to close. We were focusing on Zoom at the time of this making of this video from the Friday before, so I'll use this as an example. As you can see right here, Zoom would be a perfect example of the one and done. You wait for the first 1 minute bar to close, and the first 1 minute bar that closed on Zoom, of course, was right over here. This was Thursday, right here is Friday. This was the first 1 minute bar, right? Trigger. The next time a current candlestick trades higher than a prior candlestick, go long. So as soon as this bar closes, which is at 9:31 a.m. Eastern Standard, because the market opens 9:30 a.m. Eastern Standard, and this is a 1 minute chart, the high of this candle, if you can see in the top left, is $227.05. So on the next candle right over here, you're actually buying it as it breaks 227.05. So again, your eyes are, as I said before, from the beginning of the video. I'm not going to sit here and repeat it all day. Look at the level 2. As soon as you see 227.05 approaching or going through, whatever you're comfortable with, you could buy it. If you did that, the stock went to 228.54. You had an opportunity to pretty much make $1.50, $1.49. It pretty much went $1.50 in 1 minute. In 1 minute. For a lot of traders, that is their day. I mean, think about it. If you took 500 shares of stock, or you can even do it through option, but let's say just for example's sake, you took 500 shares of stock and it popped, 75 cents and you made 375 bucks. Let's say you made half of the $1.50. I don't even want to assume you sold it perfectly. For a lot of people, making $375 by 9:32 a.m. is enough for them to shut their software down. And yes, I get it. It ended up, going a little higher afterwards and digesting, going up afterwards. That is the one and done. Your stop is always at the low of the prior candle. So I'll give you some example on this. I will give you more of a drawn out example just to make sure that you understand it well. It is, again, not very complex. I'm literally I need to point out again the very obvious thing here. I'm literally telling you where to keep your eyes on these trades. I'm literally telling you, like, This is where your eyeballs should be. This is what you should be looking. This is where you should be trading. If you're using anything else that is not what I'm showing you, you have to figure that part out. And it might be good or bad for you. I can't really tell because I don't know, right? So right over here, as this yellow line breaks on candlestick number 2, and we will label the candles, this will be, whoa, that is one heck of a font there. Um, so this will be candlestick number 1 because it's the first 1 minute candle, and that will be candlestick number 2. So on candlestick number 2, ladies and gentlemen, that is where you are entering. That is where you're entering. So the yellow part is your entry. Ugh, what an ugly thing here. So right over here is your entry. And of course, right over here would be your maximum exit. And I say maximum exit, a lot of times I'm not waiting for that level to hit. When I say exit, that's the worst case scenario. If you're not willing to accept the worst case scenario, you'll know that right away. Now, don't be one of those idiots and don't be one of those people who always tell you, well, if I'm risking one, why would I make half or 75 cents? Because obviously, if you go back and you look at this chart here, you know, the bottom here is $2.52 away. And the top here, it only goes up a dollar and a half. So were you risking 250 to make a dollar and a half? Not exactly. Be smart. Don't be rigid in whatever you do. Don't be one of those people who are like, I have to make this much to make up for my prior losses. I don't really care if you bought through there and you made 30 cents. Like, who gives a crap? But I was risking 250 to make the 30 cents. No, you weren't, Captain. No, you were not. Then how much was I risking? If you need everything spelled out for you, if you need everything spelled out for you, you are going to have a lot of problems trading. And that's a very common thing, and it's not your fault because Wall Street tries to spell everything out for you. So the easiest way I could spell a situation like this out for you over here in what you are seeing, the easiest way I could spell this out for you is think of it as a time thing. You buy it. You buy a stock. How many of you wanted to go up right away? This guy over here, I mean, we want it to go up right away. If it doesn't, what do I do? Get rid of it. But where? Wherever it's trading. When? Whenever it stops working. Well, when did it stop working? Right away, right? Right. Revelation. It's really, but again, don't look at trading like you need to make this and risk this. And I know a lot of people do that. All the scam gurus on Wall Street, the biggest scam on Wall Street is the 2 to 1, 50% or more. Or not even more, just 50%. That's the biggest scam on Wall Street because it fails 99% of people. This methodology I'm showing you, from what I see, has a, if not the most phenomenal consistent hit rate on Wall Street from what I've seen in my experience. Okay? Don't look at it like you should not be getting stopped out often. And your stop should constantly be getting better and better and better. Now, look, you want to swing for the fences, you're going to have huge losses. You're going to have huge losses and huge gains. If that's what you're trying to do, this is not that strategy. This is a 1 minute strategy. Okay. Next, we're going to talk about the short trades for the one and done, and it is pretty much the exact opposite. You're just basically looking for a red bar. You're looking for a so-called red bar to break down, and you're looking for follow through. So the setup is you wait for the first 1 minute bar to close. The trigger is the next time a current candlestick trades lower than a prior candlestick low, you go short, and your stop will be at the top. Since I don't have any ready live examples, I'll draw it out for you, but it remains phenomenally accurate here, obviously. I wouldn't just do it for the sakes of doing it. You'd be looking to short right there. Maybe yellow is not the best color on a white background. You'd be looking to short right over here on the second candlestick, and your top of course, your stop would, that would be your entry right over there, and your stop would be right over here. See that? First candlestick, you go short through the next one, entry, but you might be looking over here and you might say, well, well, Mark, where do I, where do I, take the money here? And I'm just telling you, it doesn't matter. Focus more on making the money first before you focus on how much money you're making. Focus on having money in your hand as opposed to focusing on how much money will be in your hands. Now, I understand you have bills. I understand the amount of money matters. And I can only tell you one thing. I can only tell you what's the best thing to build upon yourself. Well, Mark, I'm in a rush. I have a $300,000 mortgage. I have a wife. I have 3 kids. Wife's out of work. I have a $50,000 trading account, and I have $5,000 a month in bills. What do I do? Look, everybody's in a different situation. If you want me to tell you to go, huevos to the wall and just slam the gas pedal and just try to make as much money as you can, I'm not going to be the person to tell you that. I'm not going to be the person to tell you that. I'm going to tell you the right thing. And if you could try to accomplish as many of these right things as possible, I think you're going to be in very, very good shape. Okay? That's what I think. Next, ladies and gentlemen, is going to be the Know Your Limit strategy. Now, we usually use the 8 and 21. I added the 55 and 100 there just to add it. Very simple. One, you choose a Newsbeat name that has a gap up that you like. I'll usually call up, I'll a lot of times call out names in the room that I like. For example, like Zoom was the last one we called. But again, by the time you watch this video, it'll be a million other things. But I usually call something throughout the day that I like. This is a very important step, and I realized I forgot it on the last video, and I do apologize if it caused any confusion. But just to make sure that you guys know, step 2 says make sure the first candlestick does not hit the moving average you want to use, or the strategy is null and void for that stock. If the first candlestick. So all these strategies that I'm telling you always are based on the first time something happens. So any strategy, whether it's the one and done, it's the first time that 1 minute bar breaks out if you're looking to go long. Not the second, not the third, not the fourth, not the 10th, not the 23rd time, the first only. So everything is the first time only unless a chart reset occurs, which we'll go through later. But always think of it as just the first time. So um, we'll use Zoom as an example, but going back here, the setup. So you'll notice how like I tried to start wording things like setup. So the setup part is what you're doing to set up for the strategy before you execute. It says for only the first time it hits and breaks the 80 EMA and or 21 EMA or 55 or 100 on a 1 minute chart, wait for the candlestick to close. The truth is it could be any number you want. It could be a 17 EMA, it could be 132 EMA, whatever makes you sleep better at night, Sally. But at the end of the day, these are the ones that I use that I find consistency with. If you're wondering why I use these numbers, they are Fibonacci numbers in terms of the 8 and 21. You're waiting for the first time it hits and breaks. It hits and breaks. That is what you are waiting for. So as soon as it hits and breaks, you could go to the next step on the 1 minute, which is, of course, the trigger. And then afterwards, the trigger simply says the next time a prior 1 minute high breaks on a current candlestick, buy the stock. Again, I'm not going to give examples for every slide. This one I will. This one I will. So just stay tuned. Next, you set a stop at the low of the same prior candle you used to determine your buy. Please note that in order for you to use any moving average here, a higher moving average must have not tested. So for example, if a 21 EMA happened to test before an 8 EMA, which is rare, but it happens, you cannot use the 8 EMA if the 21 tested before the 8. It's very rare, but it happens. Not only that, you have a little tip. It works best when the moving average tested is above the first 1 minute high. It works best. It's not a be all end all, but it works best when that moving average is above the 1 minute high. For me, unless it's trading in like the upper middle range, I'm probably going to ignore it completely. But let's go ahead and let's talk about the strategy here. Setup. Let's start with the setup. The first time it hits and breaks, we're going to just do the ADMA, but it works for all the others, but we'll just do the 8. First time it hits and breaks. So the first time the ADMA breaks right here, and we're going to zoom in to make it easier for your viewing pleasure. You can see right over here that it happens to hit right over here for the first time, like right up here on this candle. It hits the yellow line. The yellow line is the ADMA, and you're just waiting for the stock to hit it. Now, after it hits, your setup is done. So setup is complete. Setup complete at this point. Now you're waiting to trigger. So as we said here, the trigger is the next time a prior 1 minute high breaks on a current candlestick. So you're basically waiting after this bar closes. You're waiting for any candlestick in the future from this point forward to break a prior high. You're waiting from this point, whatever in the future happens, to break a prior high. After the setup is complete, you could only trigger afterwards on the next candle. So the high right here just misses it, just misses this prior high. It just misses it over there, misses it as this candle right here did not get on top of that. But right over here, you could see that you finally were able to break through right over here on this candle. So let's just label the candles for discussionary purposes, and it's just basically candle 1. This is candle 2, and this is candle 3. So basically candle 3, the high of candle 3, or rather, I'm sorry, candle 3 before getting to the high, went through the high of candle number 2. So you're sitting there and you're watching it in real time. So if you are actually trying to do this trade in Zoom, let's say you are actually, let's say like how would Mark actually just execute this trade in Zoom? All right, Mark, I sort of get it. Look, I'll say it again. If you're using a platform that is not mine, you're going to have to try to either emulate what I do or maybe you do your own thing if it works for you. If it works for you, do it. If something works for you, don't ever change it. I don't want you to fix that which is not broken, okay? Do not fix that which is not broken, all right? So let's see if we could pull something in here for you guys. And basically, so after after this after this candle closes, after you see setup complete, which is this candle right over here, you'll notice the high is 227.83. It might be hard to see those little letters in the top left, but take my word for it. The high of this 1 minute candle is 227.83. The high of this 1 minute candle is 227.82. It missed it by a penny, which is a very dangerous candle because if you were trying to front run it before it broke through, you probably got long and started dropping money. If that was the case here and you entered in on a front run here, your stop would have been at worst 226.72 or earlier. Pretty much, if you got to 82 cents and you started dropping and dropping, you'd probably want to sell out before you get here. And with the thought in the back of your head is when it's ready to go, I could just always re-enter it. And there's nothing wrong with that. And I think that's a perfect example to point that out. But the high of this candle is 227.83. High of this candle 227.82. The high of this candle 227.18. So after this candle closes and this one opens up right here, you're waiting for the stock to go through 227.18. Now, granted, Zoom is going to be at a different price as it happened earlier in the day. And the price that I'm showing you here on Zoom happens to be a closing price. I know the screen went black. Just relax, relax. Just take a deep breath. Nothing is wrong on your computer in this circumstance. So what I'm actually doing, what I'm actually doing is I'm either buying calls or shares. I'm just ready to buy it. So right over here, going back to the charts, when I see 227.18 close here and I see this candlestick open, my eyes are actually right over here on the offer looking for 227.18 to go through. And if 227.18 goes through, I'm going to go ahead and buy 1,000 shares in this example. Or I'm going to go ahead and I'll usually buy more than this, but whatever you're comfortable with, it could be whatever, one contract. And you could just go ahead and click buy to open, but your eyes are over here watching for the high of 227.18 the entire time. So basically, what is actually happening there is you're actually sitting there tracking the stock for 2 minutes and change before you actually bought it with your eyes on the level two the entire time. Notice? So right over here, each of these candles are 1 minute, so you're watching it on candlestick number one. Let's say you didn't enter. Again, remember I even gave you an example if you did. You're watching candlestick number two. And again, I see someone saying I lost money accidentally front running Zoom. I don't think that was an accident. Honestly, I think that was a very good loss, in my opinion. If you bought on candlestick one because it was a penny away, if it was 30 cents away, shoot yourself in what you sit on with a tranquilizer dart and chill the F out. But you're a penny away, you try it. It's one of those yet problem, as they say. It's understandable, ya panimayu, whatever. You get it. It's not a big deal. So right over here you have the first minute, you have the second minute, and right over here you have the third minute, which obviously when it closes is the full third minute. So for 2 minutes and change, you're watching this know your limit 8 on the one to buy through right here. So that is how you would do the know your limit strategy. On the flip side, if you wanted to do a 5 minute, it's a little bit different on the 5 minute than on the 1 minute because on the 5 minute one, you're actually switching. You're actually switching to a 1 minute chart. You're actually switching on the 5 minute to a 1 minute chart, while on the 1 minute chart, you're never switching. You're never actually switching the know your limit date on a 5 minute chart. So it does become a little interesting here. The Zoom one, I think, actually technically failed on it, but I'm not here to just show you things that work. So I just want to show you the strategy. Choose a Newsbeat name that has a gap up that you like, or a name that I call out throughout the day is a lot of times what I'll do. Again, I really have a lot more conviction if I'm watching the name in the morning and then it's setting up good. I don't believe I was watching Zoom um, early on Friday until after it started showing bullishness. Just want to point that out, but moving on, same as before. Make sure the first candlestick does not hit the moving average. You want to use in your strategy, which is the 5 minute candlestick at this point, because this is again the 5 minute know your limit 8. The other one was the 1 minute. Setup is for only the first time which is the stock, hits and breaks. We'll use the ADMA, but it goes for all of them. On a 5 minute chart, the first time you hit this ADMA on a 5 minute chart, you immediately switch over to the 1 minute. So right over here, you're watching a 5 minute chart in Zoom. And again, this trade didn't actually work out so well. It looks nicer over here like it worked well, but I'll actually show you that it actually did not work out as well as you would think in this case. But it actually hits right over here for the first time. But let's go back to the strategy, of course. After it hits on that 5 minute chart, you switch immediately to a 1 minute chart. Note, this can be done before the 5 minute bar closes. So as soon as that 5 minute chart hits, you're going immediately to a 1 minute chart. So as soon as the 5 minute on the exponential 8 on a 5 minute chart hits, you're no longer using the 5 minute chart at all for this trade. You're switching immediately to a 1-minute chart. I'll explain it. The trigger is the next time a prior 1-minute high breaks on the current stock, you buy the stock. So you treat it exactly after it hits the 5-minute as if it were as if it were a 1-minute know your limit date. You treat it exactly the same way. You set a stop the same way you would do on the 1-minute know your limit date. And also the moving average thing, you don't use a 5-minute ADMA if the 21 already tested. Very rare that it happens. You won't see that often. And the strategy works best, of course, when the moving average tested is priced above the first 5-minute high. So in the example here, you see this is the first 5-minute high of Zoom. When the moving average tested over here, you could clearly see it was not above the first 5-minute high. It's not a be-all, end-all for the strategy, but it does make me like it a lot less because it is not as strong as something testing a moving average higher. Bottom line. So what I'm going to do to show you the example of this one, ladies and gentlemen, is I'm going to show you the 5-minute that hit, which is right over here. And it's going to translate on the left side to a 1-minute chart. And I'll show you exactly what I mean by that. All right, so right over here is where you hit on the 1 minute. I'm just going to print screen that so you guys can see it, and then I'm going to go ahead and show you side by side how the switch out works and how you use the other moving average. It is a little more complex from that reasoning, but honestly, it's very easy to get used to. All right, so I'm using two charts here just to show you the examples here. The one on the left is a 5-minute chart. And the one on the right is a 5-minute chart, and the one on the left is a 1-minute chart, just so we are perfectly clear. I'm just going to go ahead and remove my face for this one, just so we have a little more room. But here, actually, the one to the left right here, I actually probably screwed up this screenshot a little because this is actually the first bar that actually hit the know your limit date. So I'm just going to go ahead and just do the screenshot again for you guys, just so you could see, because I really want to give you a very easy view of how it works. It's really not that confusing. And of course, I'm sure people will have questions, but after watching these videos, most of your questions can probably be answered. So like you see right over here, got a 5-minute chart on the right. And you got a 1-minute chart on the left. Yeah, this video is going over an hour. That's okay. There's no way I was doing it under an hour. I didn't think so. I was honestly hoping for under 2 hours. That was um, as I was adding more stuff to the video. Okay, anyway, so this line right here is the 5-minute chart. I'm just going to zoom in on it just to make it easier to see. Where is the left and right bar? Right over here. So you can see right over here is the 5-minute where it hits. And then I highlight it because this shows the 5 1-minute bars of what on the 1 minute of what the 5-minute looks like. So on the left was one 5-minute bar. On the right was one 5-minute bar, but on the left here, you see it highlights it highlights it highlights that. So those are the 5 1-minute bars highlighted. So what happens here is as the moving average actually pushes down, you'll notice that it actually tests right here. So just to give you a look again, the exponential 8 is actually breached at 228.15. So you look over here and see which 1-minute bar broke 228.15. It was actually this bar. The low of this bar is 228.08. So you're actually starting from this bar. And the next time a 1-minute bar breaks out, you have an entry and an exit. So going back to our picture, just to show you, And I don't want it to be confusing, so just chill out if you're not understanding it just yet. This 1 minute candle right over here, candlestick number 5, on the 5 minute chart, that's when the exponential 8 broke. On the 1 minute, it translates into this fifth candle right here. So what happens is very simply here, you would just do the same thing as a know your limit 1 EMA. You'd be buying on that red candle right over there, and you'd be setting a stop right over here. So the yellow bar would be your entry, the red bar would be your exit, and it would pop up, give you an opportunity for a quick hyper scalp. If you did not take that hyper scalp, you might have gotten stopped out here, unfortunately, just by pennies, as the bottom actually hit of this red thing here, and then it would have taken off to the upside. So that would have been an example of a 5 minute know your limit 8 in that example. So I hope that made some sense to you. And again, it's much easier if you watch this video 3, 4 times, in my opinion, even though that's going to take you many hours. Listen to it while you're in bed. On the toilet is a very good place to listen to it. Maybe you're sunbathing outside. Bring your phone with you and listen to it. It'll be very helpful. Remember, it's taken me, to the point of where I could develop these strategies, share them, and make them. It's taken me 2 decades. So keep in mind, it's a very long time. For the bearish side on the 1 and 5 minute, same thing, just vice versa. You can read it. I won't show you examples. It says it the same exact way as the long ones, except reverse. You're just waiting for a prior 1 minute low to break after the moving average hits. I'll let you read that as you need. Here's the 1 minute. 5 minute, same thing. You wait for a 5 minute know your limit 8 to hit. Switch over to a 1 minute, and then the next time a 1 minute bar breaks after the 580 MA hits, you go short. Same exact thing. No examples for this one. Next, we're going to go over the Mark 1 and Mark 5 trades here very briefly. Very simple. Choose a name given in the Newsbeat live room. A lot of times this name will be given after the market opens as well as before. Depends on how it sets up. Setup. Step number 2, for only the first time, watch your chart until a current 1 minute candlestick closes without going higher than the prior 1 minute candlestick. I'll repeat that. For the first time, you're going to watch a 1 minute candlestick close, meaning the candlestick ends and a new one opens, without going higher than the prior 1 minute candlestick. And this is, again, for only the first time this happens on the 1 minute chart. Afterwards, after that happens, after it doesn't happen where a 1 minute candle doesn't go up through the prior run, you simply look for a trigger, which is the next time a current 1 minute candlestick trades above the prior 1 minute high, you simply buy the stock. So literally, if you think about it, after this happens over here, it just literally turns into a one and done again. Same thing with the know your limit 8 on the 1. It just literally turns into a one and done where you're just buying the next 1 minute breakout and setting a stop underneath. So it's amazing how all these strategies just really work together. They really work together so well. They really just all fit. They just really all fit together and are pretty much doing the same exact thing. Funny how effective it is, right? Set a stop at the prior 1 minute candlestick low. Your potential target is day high. Tip works best when the stock is trading above view up in 80 MA. Tip, you can take profits and stop losses earlier based on personal comfort levels. Tip works best when you're trading above the first 1 minute candlestick high. So the funny thing is, a lot of times you'll see strategy overlaps. You'll see strategy overlaps a lot of times. So for example, right here in Zoom, you're seeing a strategy overlap here. Okay. You're seeing a strategy overlap here. So what's happening here in Zoom is, let's say, all right, you're doing a Mark 1. Here's candles. Probably want to use the color red here so it shows up easier. Here's candlestick 1, here's candlestick 2. These are 1-minute charts. Here's candlestick number 3. Here's candlestick number 4. Here's candlestick number 5, 6. So literally, it's like 9:31. As soon as 9:31 happens Eastern Standard, you get this: 9:32, 9:33, 9:34, 9:35, 9:36. So it's a 1-minute chart. So just sharing with you the time of day as these things happen and just literally labeling it out. So what I'm showing you here is literally the first 12 minutes, okay? The first 12 minutes, right? So when you're going back to the strategy, just take it at face value. You're looking for the first time a current 1-minute candlestick closes without going higher than the prior 1-minute candle. So you literally have to wait for the first candlestick to close. You can't do anything between 9:30 and 9:31 with this strategy. And then of course you had the one and done, which worked on step 2, but we're talking about the Mark 1 strategy. So right over here, you'll see that this candlestick did get above the prior 1-minute high, so you don't have a Mark 1. This one didn't. But right over here, on candlestick number 4, you're actually, the setup is actually complete and you're waiting to trigger. So the setup here is actually complete because for the first time you have a candlestick that did not actually break a prior high. The high of candlestick number 4 is lower than the high of candlestick number 3. So after this point is when you're looking for the next 1-minute candle to break. So you're literally waiting and waiting and waiting. And it actually turns out that the Know Your Limit 8 on the 1 and the Mark 1 are the same exact strategy in this case. And you're actually buying, you're triggering, you're buying on candlestick. Your trigger is executed there. Then, of course, your hard stop, your worst case scenario stop is put in place at the bottom right there. Do you guys get that in the room? I mean, I'm not really going to do a Q&A now during this video, but does that make sense to you? The Mark 1? And if it doesn't, it's okay. I definitely want you to rewatch this video. So that is the Mark 1. The Mark 5 is the same exact thing, except it's what I just showed you on a 5-minute chart. So for the sakes of examples, why don't we just use Zoom? Why don't we just use Zoom again, and we will show you what a 5-minute a Mark 5 looks like. Remember, you don't need any moving averages for the Mark 5. It's a strictly candlestick-based strategy. And we're going to share with you the Mark 5. So the Mark 5 is very simple here. Whoops. Right over here, you choose the Mark 5. Same as the Mark 1, exactly in every way, except you're just looking at a 5-minute chart and not the 1-minute chart. You're waiting for the first time setup. For only the first time, watch your chart until a current 5-minute candlestick closes without going higher than a prior 5-minute candle. So with that being said, think about it. What is the minimum amount of time you can wait before doing a Mark 5 based on what I just said? You have to wait for one 5-minute candle to not break a previous 5-minute candle on the day. So the earliest you could do a Mark 5 is after two 5-minute bars close. After two 5-minute bars close, which is after 9:40 a.m. Eastern Standard. So after 9:40 a.m. is the earliest you could do it, because from 9:30 to 9:35 is candlestick 1. If a candle is not going to break the prior high, which is only for the day after the open, you have to wait from 9:35 to 9:40 to see if that 5-minute candle doesn't break the prior high. So it's already 9:40 a.m. before you're even thinking of executing, which is actually exactly what has happened here. Again, just using our love child over here, Zoom, and you could just very simply see that right over here, your setup is complete. Here's the first, I'll just label them briefly again. We got candlestick 1, 2, 3, whatever, 4. That's it. That's all you really need for this one. This is the first 5-minute candle, second, third, fourth. Keep in mind, again, as I just said, this is a 5-minute chart. Just keep that in mind. So you could just simply see right over here that your setup is complete. Setup complete right over here. Because you already have a candlestick that did not break the prior high. The high of candlestick 1 is higher than the high of candlestick 2, and you wait for the candlesticks to close before you know this. And it's a fact at that point. You don't have to get it. You don't have to guess it. Rather, you get it right away, right? So zooming back in, um, you're pretty much buying when the next time the high of a prior candle breaks, similar to the Mark 1. So right over here, you're gonna, so right over here, you're executing right over here on candlestick 3. You execute because it gets above candlestick 2, and your hard stop would be right over here. Your target, and again, you don't have to always wait for your target. Sometimes I don't like that word a lot because it insinuates a zombie-like trance where you're supposed to sit there and say, well, my stop didn't hit, my target didn't hit. I'm going to just, you see this hand? This is Al Bundy. You can't see it, but it's completely Al Bundy'd right now. And you're just sitting there Al Bundy style, waiting for the day highs to hit. And it's just no. Your target, I know, I just Al Bundy'd. Do you know he's a brown belt in Brazilian Jiu Jitsu? Al Bundy can kick the crap out of people. Anyway, um, that is the day high at the time, which is your target. And you can obviously see with this tail that the day high um, definitely hit. So that is your Mark 5. Very simple. Again, that is for the long trade Mark 5s. And of course, we have the short trade Mark 5, which is vice versa, which I do not have an example for here. The whole point isn't to make this a 4 or 5 hour video. I was really hoping to go under 2 hours, which was my honest goal here with all the information I'm giving. But you can go ahead and read it. It's basically the exact opposite of everything I just talked about in terms of you just have a red bar. You wait for a 5-minute red bar to not break the prior low. As soon as that happens, your setup is complete. Then you go ahead and execute to the short side. Maybe in the future I might do some examples of this, but it's not meant for this video. Chart reset. Yeah, so chart reset isn't exactly a trade. It's just a point where you're supposed to just basically look and say none of my strategies happened is what a chart reset is. It's basically saying everything that happened for the first time no longer happened for the first time. That's all it is. That's all it is. Anything that has happened for the first time no longer happened for the first time. You get to start over with a new one and done, a new Know Your Limit 8, a new Mark 5, a new Mark 1, anything. You have the ability to do all these things. Um, you have the ability to just basically start over on the strategies as if they didn't happen at all. That's only after a chart reset happens, if it even happens. It doesn't always happen. Usually there's some news event. Sometimes there isn't, but usually there's a news event that would cause that to happen. And I think a good example is like an IZEA, which again, I had a very hard read on that one. They released a new product and it sold off like the company was going out of business. And just to show you the example, right over here, you see IZEA trading throughout the day, small crap name, and then all of a sudden it plummets here on heavy volume. You could already see just by looking at a Mark 5 that works. You had to know your limit 8 that works. You could have applied a couple strategies here that would have worked. But notice the volume elevation here. You'll see like a really clear, distinct volume elevation. It doesn't always have to be that dramatic. That just makes it really easy to spot. The higher the volume, the more conviction you have with the chart reset and the strategies you're executing upon there on after. So keep in mind that I don't say that on the slide, but I'm saying it in the video because that is the point of the video, not just sending you guys slides and saying figure it out for yourself. You have to watch this video. The purpose, as I said before, is to allow one, which is you, unless you're a Siamese twin, then would it be both of you? Anyway, it's to allow a trader to start over on a chart as if the Newsbeat strategies never occurred the first time. Very, very simple. How to apply it? You look for a chart that puts in a 1 minute or a 5 minute spike in volume. I like it to be approximately 3 times higher or more than a prior candle, but it's usually visible by a very wide range green or red bar. So again, don't fall in love with the number 3. It could be 2.5, it could be 5, it could be 10. But you basically see like a very wide range red bar here come out of nowhere with tremendous volume. And it shows that a shift basically happened. Again, this is a very dramatic example. Sometimes the examples are a lot less dramatic. But nonetheless, it gives you a good example of what is happening. You treat every Newsbeat strategy, after this happens, you treat every Newsbeat strategy as if you were looking at a fresh chart starting at 9:30 a.m. Eastern Standard. And the tip I give, of course, is what I just said, is the 3 times number is not exact. The higher the better. There is no exact science that I currently have to this, but it should be obvious by an extreme volume spike, but generally based on an event, news related, etc. So I suggest that, I'll call out chart resets. You can always ask me throughout the day. Like a lot of times, if something happens, if there's something with a lot of volume, and I say, is there any analysis or something you could, happen? You could say, Mark, was this a chart reset over here? You could like ask me, like I make myself very easily accessible, even during the trading day, much more when the trading day ends, obviously, as I'm not trying to find you breaking news ideas after the market is closed, um, to ask me these questions. So feel free to go ahead and ask. Chart reset basically just lets you chart reset basically just lets you do all the strategies that I showed you in a more of a real-time type setting. So next, the VWAP 1 minute know your limit. Yeah, you're probably wondering about this, so I will just pull up a chart that has nothing more than the stock candlesticks, the volume, and the VWAP. We'll just go ahead and we'll go ahead and we'll discuss the 1 minute VWAP. So the VWAP, and the way I'm showing it to you today, is literally like you're using it like a know your limit strategy. The only thing is you don't have to be so worried if it touches early. Now on TC2000, the VWAP sort of looks like this. I'm going to show you the VWAP sort of looks like this right now on Zoom. This orange line here is the VWAP. You can see the VWAP doesn't start on the first candle on TC2000. I am taking that into account. You'll notice that you pushed above it, you pulled back to it, and you just basically use it as if it were like a know your limit strategy. Again, the whole point of the way I'm describing this is to show you that a lot of the strategies that I'm trying to do now are taking you back to a 1 minute time frame. And you might be wondering, like, Mark, it wasn't always like this over the years. Like, why is it always taking me back to a 1 minute time frame? Because I'm giving you the tightest risk. I am removing the most psychological toxicity by trying to limit your losses. You know how many people tell me, Mark, I don't have any more blowout days anymore, and like I'm down a little bit of money, but I'm up for the week, for the month, I'm happy. Like that is like something that needs to be done. That is something that really needs to be done. Like you really need to break it down to a 1 minute chart if you're going to minimize your risk. So I mean, a 1 minute bar will usually be less of a range than a 5 minute bar. So if you're using the bottom of a candlestick, you'll usually have a tighter range on a 1 minute bar, almost always, than a 5 minute bar, 10 minute bar, 20 minute bar, 15 hour, daily, whatever. So the whole point is every strategy I'm showing you is meant to minimize risk. Keep that in mind. The setup, you watch for a stock to put in a clear green bar above or through the 1 minute VWAP. Keep in mind this is the rules for the long VWAP trade. The next time the stock retests the VWAP, remain focused on your 1 minute chart. Then, the next time a current 1 minute candlestick goes higher than the prior 1 minute candlestick, go long. So it literally just turns into using the VWAP almost in the same exact way that you would use a moving average. And I know that's not the same as how I've been doing it over the years, but that is currently in the current market environment of how I like to use the VWAP. And again, for Zoom, the irony is the entry on the Know Your Limit 8 on the 1. Let me show you something. The Know Your Limit 8 on the 1 and the VWAP and the Mark 1 all coincided with the same trade. Now that's a coincidence. It doesn't always work like that. I know what you're thinking. Mark, does that add conviction? Probably. If you have three strategies executing, see Baxter, I told you, great minds think alike, right? Probably, but it is a 1 minute chart nonetheless. But you could just see right here, you pulled back to the VWAP. A lot of times you'll just go straight up from here and not even pull down. In this case, you pulled down a little before going straight up. It tends to be, it really is so kumbaya. It really is um, a really effective, strategy. And you're basically just using the VWAP like a know your limit for the most part. That's pretty much what you're doing. You're just turning it into a one and done after the level hits. That's it. Now keep in mind, my strategies weren't always like this. They've become a lot safer since I've done this in terms of you're risking a lot less. They've been a lot easier to manage. They've been much more psychologically fortifying since I've been doing this. So there's a lot of good reasons for these changes. It's not to make it easier on you, it's to make it healthier for you and more profitable for you. It just happens to be easier. So keep that in mind. And just like all the other strategies, going back to the 1 minute, there's the 1 minute VWAP, the 5 minute VWAP, and of course there's a 1 minute short VWAP, which is again the exact opposite thing. It just you start with red candles below, the red candles go up into the VWAP, and then you short it like a one and done. 5 minute. And again, these slides will be available for you. You can always I know, like for example, I just whizzed by this. You can pause this video in the future and watch it, or any of the slides I've shown, and just read them and take your time. Like, don't feel like you have to move at Speedy Gonzalez pace over here. Roadrunner, like beep beep. Like you could just like chill out and turn into like the tortoise and just slow it down. And as somebody is asking, absolutely, this will be in your portal. I'm probably going to put in the portal tomorrow because I'm just going to have to double my life insurance policy and then see how my wife feels about me tonight, and we'll move on from there. Moving on along to the 5 minute know your limit. The VWAP 5 minute. Notice how I call it like the VWAP 1 minute know your limit, and I called it the VWAP 5 minute know your limit as opposed to VWAP reversal or something fancy because I really want to draw the connection between the know your limit strategy and the VWAP. That was done intentionally. So same thing like the know your limit 8. I should really set one up, Harry. A GoFundMe page. Yeah. Um, the next time the stock retests, it's really the same thing as the know your limits. You're just using the VWAP. And again, the VWAP is the one I use on TC2000. It's all standard VWAP. Utilize it. Set up the next time a stock retests the 5-minute VWAP, you switch over to a 1-minute chart. The next time the current 1-minute candlestick goes higher, you buy in and you set a stop below the 1. It is literally the same exact way you would use a know your limit strategy. A lot of times you have to do a chart reset on the VWAP. That's the only thing. A lot of times it executes well on a chart reset when the stock, for example, is underneath the VWAP. It blasts up with volume, goes a little higher, and then digests back to the VWAP, and then you look for a long. That is very common, but the strategy remains the same. Of course, this is the short one on the VWAP, and that is the short VWAP 5-minute. I am going to share with you something really cool. I have done it once before. I'm sure a lot of people have not seen that video, but I think it's going to be very valuable. And what I am going to do is I am going to share with you some very important things that I have learned over my career as a trader. A lot of the things that 40 things that I have learned in trading over 2 decades of active intraday trading. I think it'll be very valuable. I do also want to just quickly mention in the description of this video, there obviously I know there's I know there's a lot of topics. Inside this super video, you're going to get a link to the intro video. I suggest you watch every single video inside. There's an 821 curl strategy, which I didn't go over tonight. There's a link to that. There's a link to the cboe.com/education for where you learn options. If you're curious what an A plus trigger is, there's a video link to that. If you're curious how I interpret bull and bear flags, there's a link to that. If you want to conquer psychological tilting, there's a link to that. Again, this was not supposed to be an 8-hour video. So if you want to know about these individual things, I listed them very neatly in the description of this video. I'll go ahead and spam it in chat as well, but that is really irrelevant. You could just really go to the link of this video. We talk, of course, as I said, about the psychological conquering of tilting when you make a losing trade and then you start doubling, tripling, and your small losing day turns into a large losing day. It's a very important thing. Many traders, myself used to, very included, suffered from that. The link to the OODA loop, which allows you to sign up for the Bandit course. I would not sign up for it. I would contact a trading advisor first, and if you want, maybe there could or could not be a discount. I don't know. You can always ask. I'm not really sure of the specials going on here at T3, but if you go through my link, it's like $295. You might be able to save money through the trading counselor, and I encourage you to do that. Spend as little money as you can for any product, myself included. www.tc2000.com is in the description of this video. If you want to know how I front run trades, there's a video on that. My email, mark@t3live.com, is also in the link description of this video. How to get in touch with your trading counselor for the best deals is info@t3live.com. Also a link in the description of this video. This video is not ending, by the way. It's just beginning. I'm just sharing things that I did not go over before I move on. The best trading biohacks, I call them, for better sleep. I put a link in the description for the Philip Stein sleep bracelets. Best trading biohacks to use while trading is the wellness bracelets. I would not trade without a wellness bracelet on. Um, it's really the greatest biohack I have ever seen in my life for trading. There's a link in the description to purchase it. Purchase the cheapest one unless you really want diamonds all over something, which is phenomenally pricey and gaudy, but to each their own. My wife has a diamond watch from them, and again, they're not like it's like a $2,000 watch. Anyway, um, best computer building company I've ever used is PugetSystems.com. There's a link in the description there. And now, ladies and gentlemen, what I'm going to share with you before I polish this video off is the 40 lessons I've learned trading. 40 things I have learned trading. I'm going to breeze through them. Doubling down and adding to a losing position is an easy way to make your money back and the stupidest thing you could do because you're almost guaranteed, you're pretty much mathematically guaranteed that you're going to have a blow up day that's going to make every time you've done it before not worth it. Never double down. In fact, doubling down, I don't even like doubling in on winners. I don't like doubling in on losers. I very, very rarely do it. Try not to. It's not worth it. Trust me. You'd rather be wrong and learn how to do it right than double in and pray that your stock goes up. Your biggest winners, second thing I've learned, the biggest winners often have the biggest volume. So your biggest winners will often have a lot of volume behind them. Direxion stocks such as FAZ, you know, things like that, FA, whatever it is, the 3 times Direxion daily stocks will deplete your account over the long term because they always go to zero. Just show you an example of that. Here's FAZ on the daily, and if you look at it on the monthly, you can see these shares that are trading at $17 today. After all the splits, where one's trading at $807,440. Pre-reverse splits, of course. These things go to zero. Stay away from them. Same thing with the VIX. Always goes to zero, VXX. You might be like, really? Does it? I mean, yeah, it really does. TVXY or like TZA. You know, TZA, the all-time high, $187,000. I mean, seriously. That's a monthly of TZA. It starts out so high you can't even see the candles anymore. TNA, you figure this one should be much higher. No, not really. Be very careful on those. Number 4, be careful of stocks that take too long to go in your desired direction. That's why I talk about all the time. Have a time stop on something. You buy a stock, it should work. It's not. What's going on? What's wrong? That's the first thing you should think. Teaches you really well that I teach that really well in the OODA loop. Make sure your stocks are going in your desired direction immediately. Next, more trades do not equal more profits. Less is always more when it comes to trading. The best traders I've met over the past 2 decades keep trading as simple as possible. They're not quant guys who are, you know, who are just, super math geniuses. They have an edge, they know what they do well, they identify it, and they exploit it. Next, lesson 711. Never underestimate the confidence building and the psychological toxicity chipping effect of a tiny gain that is locked in. When you have a tiny gain on your screen, you might look at it financially and say, it's only $1, $5, or $10, or $50. Do not underestimate what you're really gaining, and that's your confidence foundation and chipping away at prior psychological toxicity. Most traders who are on a losing streak, it started because a basic rule that they have has been broken. Identify it, change it, reevaluate, and move forward. Next, it's okay to be wrong. I'm wrong. I'm right. I'm wrong. I'm right. But it's never okay to stay wrong. Fix what you're doing wrong. It's okay to be wrong. Don't beat yourself up, but don't stay wrong. I found it over the years very hard to short a market when the financials are strong, when the banks and financials are strong. Very hard to short a market. Next is keep your market approach simple. If you were to tell me about your market approach and explain it to me, could you explain it to a 12-year-old? Your market approach? Again, keep it simple, stupid, no matter how smart you are. Lessons 12 to 16. Trading a choppy market is a surefire way towards frustration and psychological toxicity. Choppy markets, we identify them quicker than probably any other service out there, not to pat ourselves on the back. It's one of the things I pride myself on that I do well. I don't do everything well. It's one of the things I do well. Chat rooms are the best learning tools, but most are noise. Less is more. Chat rooms that, and again, I don't say this because I run a room. Chat room that has, that have the Three Stooges who come on. You see Three Stooges come on, Mo, Larry, and Curly or whatever, Curl, whatever. They come on, they take turns, or 10 of them come on. It's not value. More is not better. Most chat rooms are the best learning tools when run properly, but most are noise. That's why I try to shut up as much as possible, be silent more often than noisy. You're running a room, you don't need constant blabber in your ear 24/7. Trust your gut. If something does not feel right, shoot first, ask questions later. In this case, in trading, sell first and ask questions later. You buy something, something doesn't feel right. It's supposed to sell. Okay, let's see what happens afterwards. Not hold and see what happens afterwards. Bravery in trading is defined by those who can admit a trade is not working. Cowardice is to carry it while praying for a bounce. Next, your hardest work is done after the market closes, and believe me, if this video does not prove that to me, nothing will at this point. Your hardest work is done after the market closes. It's not about being bullish or bearish. It's not about that at all. It's about being right. Without this rule, failure is just short of guaranteed. I don't really care if you're a bull or bear. It's just about being right. True professional traders understand that they have several more weaknesses than strengths, and they exploit this. Psychological toxicity can be measured by a trader being never happy with a trade. Does that sound familiar? Does that sound familiar? Oh, I only made this. I should have held. Psychological toxicity can be measured by a trader who's never happy with a trade, even when they win. Recognize this. No trade will ever be perfect. That's okay. The realization is important. Big volume breakouts are often bought right up on the first dip. Next, never take a position too big for your comfort zone. Wall Street encourages us that we must be uncomfortable in order to grow. This is one of their biggest lies. One of. Break out of your comfort zone. Shut up, imbecile. I want you to cross the street without looking. I know you're scared, but you got to fight against it. Please don't do that. I'm making fun of whoever would tell you otherwise. Okay, anyway. Always be aware what is strong when the market is weak. That's the relative strength thing we talked about. Also look for relative weakness. Always be aware what is weak when the market is strong. It's one of the things we do after the market opens, correct? It wasn't a question, it was a statement. That is what we do. What worked last week is far more important than worked for the last year. If you're backtesting and you're looking at your strategies manually, look at what worked last week. So much more important than what worked for the entire last year, even if it includes last week. Batting between 43 and 57%, what I like and invented by calling the 43-57 paradigm, is the perfect recipe to destroy 98 to 99% of traders. 99% of traders have very negative emotions when losing money. Learn from someone who despises losing trades, not from someone who handles it well. I lose money, it's no problem. I only show you winning trade that I do. I fine. Learn from somebody who can't stand losing trades, not from somebody who handles it well. Those are the people you're going to be able to relate to best. Next, keep a balanced life. Spend time with things that actually deserve your attention, like your wife, Mark Melnick. I mean, what? I spend a lot of time with her. I'm kidding. Don't dwell on missing an opportunity. You're going to miss opportunities for the rest of your life. The markets are a never-ending stream, and they shall flow towards you again and again, whether you like it or not. You ever see me when I miss an opportunity? Ah, I missed it. I was looking at that damn news play. Oh well. That's the right attitude. Chart patterns are not consistently reliable. That is why tight stops are very important, the way we describe them. Otherwise, you'll always take big losses. Dimitri, that's where he meets the girls he dates, I think, on Yandex. Next, the market is always evolving. Your strategies must do so as well. The market is always evolving. Your strategies must do so as well. Avoid the flashy lights. Just about 100% of traders who get lured to that fails. Avoid the look how much money I made in one day trading. I make so much money. Avoid that. People like that are going to destroy you psychologically and they'll charge you money to follow them. Avoid traders who cherry pick examples of winning trades to prove a point. Anyone can show you what you should have done. Captain Hindsight. Next, follow a mentor or guru who genuinely goes out of their way to help ensure your success. Only follow somebody who really goes out of their way to help you, especially during your hard times. Last two lessons. Did I skip from 25 to 28? Did I do this? No, I went over these. Oh, this one I skipped, 29 to 33. There you go. You're right. Thank you. You are 100% responsible for your results, period. No one else. Not me, not him, not her, not Shim, not them, not the alien. Take me to your trading software. Next, having a TV onto a financial news network when you trade makes you look professional and trade like a novice. Turn off the television. Next, you must do things others won't do in order to get things others don't have. You must do things others won't do in order to get things others don't have. Next, becoming a successful trader is a matter of when, not if. You might not know it if you're losing money now. It's a matter of when, not if. Eventually, everyone will succeed if you always have a live account with money. Consistency is measured per trade, not per year. And now the last two things. Every trade has way more to risk than capital. There are winning trades that you take which will destroy your account, and losing trades you take which will save your account. A lot of people who make money using the wrong psychology and the wrong ideas, a lot of people who do that are just playing on borrowed money to give it back at a later point. Be very careful of doing things the right way. Doubling in, tripling in, quadrupling in, you're down a lot of money, you get back to green and you sell the position out right away. Maybe you made 500 bucks or $1,000 and you're like, ooh, look at that. I did that well. No, you didn't. Be careful. Last but not least, be grateful to those that give. Be inspired by the life actions that others do. Strive for excellence and be grateful for everything you have in life. If you can read this message, I promise you that life can be much worse. Be happy, feel blessed. I hope you guys enjoyed this Newsbeat Master video. Happy trading, make money. And I will see you guys next time on the Newsbeat live trading broadcast.